This show is brought to you by NMDC Group.
Saudi's United Mining Industries sets its IPO price range, and a Ukraine ship carrying wheat leaves port for Egypt. You're watching The Daily Brief with Forbes. I'm Ramia Faraj. Gypsum products maker United Mining Industries has set the price range for its IPO on the Saudi market at between $8.26 and $9.06 per share. The company seeks to float 1.75 million shares, or 12.5% of capital. The book-building process for investors will run from September 26th to October 2nd. The maximum shares for each investor is capped at just under 700,000 shares. The company is a joint venture of 3 Saudi construction businesses. Oil recovered today after declining for 3 consecutive days this week. Brent crude edged towards $94 and WTI passed $90. It comes over worries of a global supply shortage after Russia announced it would ban its gasoline and diesel fuel exports. Also, U.S. crude stockpiles posted another drop. And of course, the Fed signaled borrowing costs will stay higher for longer, boosting the dollar and depressing commodities, including oil. A ship carrying wheat has left a Ukrainian port and is heading to Egypt. It's the second such trip since Russia reimposed its Black Sea blockade in July. Ukrainian officials say the vessel left the port after being loaded with 17,600 tons of grain. Ukraine is testing a new sea route that avoids international waters and follows those controlled by NATO members Bulgaria and Romania. A first ship carrying 3,000 tons of wheat left the same port earlier this week. The Eurozone economy will likely contract in Q3 and won't return to growth anytime soon. That's according to HCOB's Eurozone Purchasing Managers Index by S&P. The PMI rose to 47.1 in September from August's 33-month low of 46.7. Some analysts say, despite the slight rise, they expect a 0.4% contraction this quarter. The main drag continues to come from manufacturing, where the order situation deteriorated further. Xbox owner Microsoft has closed in on its $69 billion takeover of Call of Duty video game maker Activision Blizzard after the UK confirmed a revamped deal addressed regulatory concerns. The U.S. tech titan launched its bid early last year, seeking to establish the world's 3rd biggest gaming firm by revenue after China's Tencent and Japan's PlayStation maker Sony. The transaction has faced significant scrutiny from regulators in the U.S. and Britain, where the Competition and Markets Authority blocked a previous version of the deal in April. The CMA said in a statement today that the restructured deal makes important changes and opens the door to the deal being cleared. And the European Commission has slapped a reduced fine of $400 million against U.S. chipmaker Intel for abusing its dominance in the computer chip market. It comes after an EU court annulled a bigger penalty. The EU's antitrust enforcer said Intel engaged in a series of anti-competitive practices aimed at excluding competitors from the relevant market. An EU court previously annulled the fine of $1.13 billion handed down in 2009 after it found that Brussels failed to adequately prove anti-competitive practices. I'm Ramia Faraj. This is The Daily Brief. Thanks for watching. Have a great weekend.
This show is brought to you by NMDC Group.